Well, when you do $1 billion worth of sales in the first minute and a half.
$1 billion in 90 seconds.
You know you're going to have a pretty good day. And then when you're up $10 billion in your first hour, you're pretty sure it's going to be a good day. And 27% might have been a little lighter than people thought. 30% was more like the growth they thought they would get. But think about it. It's bigger than Black Friday. It's bigger than Cyber Monday. It's bigger than the two put together. It's a really, really big day of sales. It's just amazing to me that you can do $30 billion in a day.
And Alibaba used to be, and you go on the platform, and I used to have fun. You'd go on the platform. You want to buy 75 golf carts? That's where you do it.
Right.
But now it's not just crazy thing. It's L'Oreal. It's huge global brands that are selling on Alibaba, correct?
That's been the big change. They started out with things you never heard of, and now all the brands are playing in the game. And brands sold well. Even Gap was selling on this big day. So it was all kinds of things like that. And we saw more interest from the brands on getting on than anybody really thought we would ever see. Everybody wants to play in this market. And when you're getting those kind of sales, you can see why. Where are you going to get that kind of growth in the U.S. as far as the business goes? So all the brands are moving on to it. And I say all the time, you know, Alibaba, Walmart, and Amazon get to divide up the world because it is really an engine, and it has grown
the U.S. shopper,
amazingly.
the U.S. online shopper, and then the global online shopper. That's the triumvirate, right?
That's the triumvirate.
Walmart, Amazon, Alibaba. We need an acronym for that. AWA.
Ooh, we're going to have to get an acronym.
For it. We're gonna figure that out. Let's talk about the United States. Yesterday, I went into a JCPenney. But it was on the way to the Apple store in the mall that I happened to be in there.
And you were the only customer?
No, there were people there, but there was a lot of signs, literally 80% off. We saw what happened to Sears. Not to pick on JCPenney, but how struggling are they right now?
They're really struggling. Because
the consumer is strong. I mean, the Target CEO told us that it was the best consumer that he had ever seen.
I believe that to be the case. I've been telling people the best in 50 years. He said the best in 37 years. People say the best in 25 years. Does it really matter?
No.
It's the best in one heck of a long time. And I say all the time, if you're not winning now, you're losing, because the consumer's not going to be better than this. 2019 is not going to have a stronger consumer than 2018 or 2017. It's going to be at best in the range. Yeah. So if you're not winning now, you're not going to win.
And that's my point. I'm not trying to pick on JCPenney. What we're saying is, for investors in particular, you can, I can't. We're looking at it from the investor perspective, which is, if you are a retailer that is struggling now, whether it's JCPenney or otherwise, if things do slow down, it's not going to get better.
If you're not a maximum taxpayer, and if you're highly levered, you are toast. And Penny's falls in both of those categories. They don't pay any taxes, so they aren't getting a big tax break, and they're highly levered. There's a lot of retailers out there like that. Their names are things like Toys R Us and Bon-Ton and Sears. And if you hear those names, we know what happened to those companies. So Penny's isn't in danger at the moment because they don't have a lot of debt coming due soon, but they do in 2023. And they're going to have to get a lot better pretty fast. And I don't believe the competition is going to let you get better. People who can afford to invest back in the business are taking all the business.